Hey, it's Eric Osnes from Homebridge Financial Home Mortgage for a mortgage update on the markets for the week of February 25th, 2022. Well, after weeks of speculation, evil has been unleashed on the people of the Ukraine. It's been a dark week for the world, but my job is to tell you what is going on here and how that will affect our economy and our interest rates. So let's get into it here. Last week, I wrote that conflict in the world typically causes what's called flight to safety investing. As money leaves the stock market, traders buy bonds, and that actually causes interest rates to fall. Some of that happened this week, but not as much as we were expecting. Probably more so. Money just left the markets entirely and is sitting on the sidelines until some of this fog lifts and we have some clarity on the situation. We saw the stock market fall and bonds were just all over the place this week. Where does this leave the Fed? Until last week, it was expected that the Fed would hike interest rates a 0.5% at their next open market committee meeting, which is in mid-March. But developments this week have changed the thinking, and now a 0.25% hike is being anticipated. 0.25% is less than expectations and does less to control inflation. So bond traders are having to reset their expectations and reassess their positions. Adding to the inflation concerns is the cost of energy. The U.S. currently imports over 595,000 barrels of oil daily from Russia. I don't know if you knew that or not. There's no word yet on whether we'll cut those imports, but global prices of oil are already rising, further sparking inflation. So we've got to keep an eye on all of these developments as the days go on. For the week, mortgage rates ended fairly flat from last week. Here's the national averages for mortgages. A conventional 30-year fixed rate, 4.18%. Conventional 15-year fixed rates, 3.44%. FHA and VA, 3.75%. Jumbo 30-year fixed rates are actually the only ones that are down just a little bit, 3.65%. They were hovering around 3.72% last week. Given the tensions in the world right now, what's the best thing that you can do, to organize your financial position? And really, maybe think about a little bit of spring cleaning. One of the things I like to look at is what is your blended rate? What's a blended rate? You may have a great rate on your mortgage, but do you have other debts where the rates are maybe not so fantastic? A blended rate helps you make that assessment. It's the overall rate you're paying on all of your debts borrowed together. If you calculate your blended rate, you can do that by adding up the annual interest expense on all of your debts and divide that by the total amount you owe. And that will tell you what your blended rate is. For example, I had a client just recently here who had a 30-year mortgage at 3.75%, good rate. But she also had a car loan at over 5% and almost $35,000 in credit card debts that were averaging, they were way over 12%. When we calculated her blended rate, it was just under 4.5%. In her case, refinancing to a rate of 4% not only lowered her blended interest rate to 4%, but it also saved her a ton of interest expense. And just as importantly, it lowered her monthly payments by, in her case, several $100s every month. So weighing everything out, even though the interest rate on the new loan was slightly higher than her existing loan, it made good financial sense for her because she was saving interest overall by lowering her blended interest rate. And also, in her case, it also significantly improved her cash flow. I'm always here to answer those types of questions and help you with that sort of analysis. You can always reach out to me, 206-915-ERIC, 206-915-3742. You can email me, Eric at ericismybanker.com. Check out the weekly radio show, AM 1590, every Saturday at 2 and Sundays at 3, or always on podcast. Just search for Open House with Team Rivas is the name of the podcast. Have a great weekend. Say a prayer for the folks of Ukraine, and I'll talk to you next week. Thanks again.